Click it right here. Well, good morning. Now, this stuff may not be as interesting as the stuff we just heard about with teeth whitening and so forth, but let me first off say that I on behalf of the ARSC, certainly appreciate the opportunity to come and talk to you all. I usually say y'all, but since I'm up north a little bit, I'll try to behave. About these important standards. Now, I've already had a little bit of pressure put on me this morning. Everybody I've talked to, from Galen Hansen to some others, have said, man, Chaz McElroy, who spoke at the New Orleans meeting, knocked it out of the park. He did great. He was the best. And so I get to follow that. But certainly appreciate the opportunity, because when we talk about writing professional standards that apply to firms all over the states and all these jurisdictions that perform compilation and review engagements, that can be a pretty daunting task. And so as we have been discussing these things and trying to write a standard that is applicable to all, that protects not only the practitioner but the public interest, we've got a lot of things to consider. And so any input that we gather from today, along with the input that Chaz has gathered, I also gave a talk at the Practitioner Symposium a couple of weeks ago in Las Vegas that also provided some very good input, is where we will go from this standard. Now, I do want to say that we have not yet issued the standard, and I'm going to go ahead and see if I can do this. We have not issued the standard. If you look at the slide right now, it talks about discussing the comp exposure draft to be released in June 2003. It's not ready. If it needs to be ready, I better get busy. We've got some work to do. So I will throw out a caveat right now that says the exposure draft as it currently sits out there with myself and with the representatives from the AICPA will change, okay, due mostly to input that we have received since the time that we had it. We actually had a conference call a few weeks ago to discuss the possibility of voting out to expose this compilation standard. And we had some input at that time that made us change our mind a little bit. So today's presentation will be on the exposure draft that we currently have, but again, that will probably change from where it is right now to where it ends up being when we do finally expose this, whether it be at the end of July or August, when that happens to be. We're not sure. I do have a conference call set up with myself and with Chaz, with Chuck Landis from the AICPA and Mike Glenn, who is our staff representative, to discuss where we want to go with this now based on the new input that we have and so forth. And we'll have this call next Tuesday. And from that point forward, we'll work diligently to try to get a standard out there that is good for the practitioners, that's good for the public interest, and that will be a good, usable standard for us to use. So as we go throughout the presentation this morning, I can't get too in-depth in less than 30 minutes, and I won't. So what I'd encourage you to do is, if you're able to come to one of the breakout sessions, I will probably be able to field more questions at that time. Janice Gray and another will be leading those sessions, and I'll be available in both of those sessions for those who have questions or comments, things you would like the ARSC to consider before we submit this exposure draft, when it comes to writing this compilation standard. So while there may be time for a few questions at the end of the presentation, I know I have till about 10:15, so there won't be much time, but please come to one of those breakout sessions. I think we can learn a lot from that, and again, I'll make myself available for any questions or comments that you all might have. So we'll look quickly. We won't go too much into clarity, because you all know that all the professional standards are being clarified or have been clarified. They're new audit standards, clarified audit standards, they're clarified quality control standards, and so on and so forth. So we'll look just real quickly at the goals of the Clarity Project. Of course, when you clarify something, you try to make it more clear. You try to make it easier to understand. Who all in here has read a professional standard? I'm just curious. That's not a funny question, man. We're practitioners. I want to know, okay? It's a tough read, isn't it? It is a tough read. There have been times when I have had problems going to sleep, and I'll pull out a professional standard, read it, and it puts me right there. So what we're trying to do with the Clarity Project is make it easier from the practitioner, because where I practice in North Alabama, we have small sole proprietor practitioners. We have some large firms that are representative, and these sole practitioners don't always take the time, and even the large don't always take the time to get into the standard because it's a difficult read. So we're trying to make it easier to read and understand and implement. So what we've done is we have taken these things, we have a definition section, we have the objective, and then we have how you do those set separately, or guidance that is set separate from the standards, so that it will be easier to follow, hopefully, and easier to comply with when it comes to doing these standards. It's similar to the Audit Standard Board's project, except the Audit Standards Board Clarity Project took international standards and compared those to what their current standard was and tried to clarify based on that. As an ARSC, we are not doing that. We are taking the current standard we have, which is AR Section 80 for compilations, AR Section 90, SARS 19. We're taking that and we're going step by step through the process. This is what we have now. How can we make that better? How can we make that more applicable? And that's what we are doing. And we're doing it in the same format as the audit literature, as the attest literature. So when you're looking from one professional standard to the other, it's easier to read, hopefully. One thing that SARS will not do is converge with international standards, of course, because the compilation engagement with international standards and with our standards is not compatible. One thing that we will converge with is the AUC Section 930, which is your interim financial statements, your reviews of interim financial information, where we have conformed to it and converged with it. Now this is the hot topic, is the clarification of the compilation standards. And just a little background on where the ARSC got to where we're at right now is with what Peak has done with 101.3, and they have been through the clarification process also, where Peak has clarified Ethics Interpretation 101-3 to state that independence wouldn't be impaired if a CPA maintains internal controls or designs internal controls for an attest client. And as we think of a test, in our definition in public accounting, we think of a test as an engagement that requires independence. And so what they've done is they've clarified this to say, okay, a CPA who designs or maintains internal controls for an attest client would not be impaired if they did these things. And so management still has to accept responsibility. You have your 3 tests that you better meet if you're doing a test, non-attest work, that they still have to accept responsibility for that internal control, but go forward. And so now that that confusion has been removed, what Peak further did is they further clarified, now this has always been there, they hadn't changed the standard necessarily, but what they've done is clarified the fact that preparation of financial statements is a non-attest service. Whereas in the past, some people thought, well, preparation of financial statements, that's an attest function, not a non-attest function. And so what Peak has done is they say, well, no, preparation is a non-attest service. So as we think, when I say we, when public accountants, CPAs, think of our definition of a test as something that requires independence, and now Peak has said, okay, well, this is a non-attest service when we're talking about preparation. What does that do with independence? Now, if I could, how many people in here, and I have a feeling that I know the outcome of this, how many people in here believe that independence is important when you're performing a compilation? Don't be shy. Raise your hand. If you believe independence is important when you're performing a compilation engagement. Okay. Wow, that's a little bit surprising. Whenever I ask the same question at practitioners, I probably have had, there's people in the back still with their hands up. I know how you feel. Okay. There are, at practitioners, there were probably 150 to 200. Now, these were just practitioners, not necessarily boards of accountancy, people who aren't out in the everyday practice. But I would probably say about half the class raised their hand. Then at the end of the talk, somebody says, well, ask the question again, Mike. And so I asked the question again, and probably a third of those who raised their hands initially had. Well, this is where the ARSC has given a great deal of thought, is this whole thing about independence. I didn't finish this slide. Of course, with Peak's interpretation, its effective date is December for periods beginning on or after December 15th, 2014. So now, how does the ARSC, how do we react to this except by going, wow, that's going to change the way we do things as CPAs when it comes to compilation engagements, because now if we think about what SARS 19 talks about, SARS 19 is a prepare and present are key to being within the compilation standard. If you the preparation, presentation, okay, would put you under these things. So now that Peak has clarified this definition of preparation as a non-attest service, when we think about the standards for compilation, review, audits, all of these type standards will have to be revised possibly for this clarification to state the preparation or drafting of financial statements, which is key, can be key in audits, reviews, and compilations, is not the part of the attest service, but yet part of the non-attest service that you would perform for some of your client engagements. So what the ARSC has considered is, okay, how can we take this thing that we've deemed to be an attest service, and now the Peak has said this preparation, which is integral to our standard as it stands right now, and said, no, that's a non-attest service. What do we as an ARSC do to make sure that our standards are compatible with what Peak says? So what we have done, at least initially, and again, this is not necessarily what this final exposure draft is going to be, but we have taken the thought that by definition, a compilation becomes a non-attest service. So since it's a non-attest service, when I'm thinking about the things that I have to do in that non-attest service, well, one of those things I don't have to do anymore is determine my independence. And that's why I asked the question among practitioners, how many of you all think independence is important when it comes to a compilation engagement? Because a compilation engagement, honestly, at least the way I see it and talking to a lot of other practitioners and third-party users of financial statements, how many of you all who prepare these financial statements maybe to be used by a bank, does that banker put more reliance on those things because it's on your letterhead? They do, don't they? You think they read that report that says I offer no assurance on these financial statements, but yet they take a level of comfort by the fact that it's on our letterhead that we've done something to those? And so now this whole thought process of now independence was part of that thing where now you have to disclose whether you're independent or you're not independent. And if we as an ARSC take the stance that independence is out of the picture because that's part of the non-attest work, then what's going to happen? So what we've done is we have, at least currently what we've done is created a non-attest compilation preparation where compilation and preparation are basically synonymous with one another, and that would be the gist really of what your compilation engagement would be now. It would be more of a preparation service than it is a read and report service as it is under the current standards. So this non-attest compilation standard that puts the requirements around what a CPA needs to do when we're preparing our financial statements for our clients, because most of our small business clients, I say I'll speak for myself where I practice, most of my small business clients, we will prepare the financial statements for them. There may be even some of our attest services such as audits or reviews where we prepare financial statements for them, where we determine our independence, we disclose if we're not, and if it's an audit, we make sure we have everything done that we're supposed to in accordance with the standards. So what the current exposure draft talks about when it comes to independence-related matters is that since comp is a non-attest service, independence, or the lack thereof, would not be required to be reported. That's a big change. And we've heard back from people who, at least we've discussed this with, that I said, I'm not sure that I'm real comfortable with that. If we don't have to determine independence when it comes to these compilations, I don't know that I'm comfortable with that. What about the public interest and so forth like that? So what we've done with the exposure draft is hopefully put some things in there that still protects the public interest, okay, but still does not necessarily make us fall back into the attest compilation. And we've talked about when reporting would be required, and I cover this in a slide a little bit later. But it'd be required when an accountant has a direct or material indirect financial interest in a client, or when a client receives a referral fee, commission, contingent fee. And this comes straight out of the requirement out of the ethics. Okay, if you look at 302 and 503, I think are the code sections that apply to this, that say you must report if you have these type things. Certainly we would not take that reporting requirement out of there because we have another professional standard that requires reporting when it comes to those issues, when you have this financial interest or you're taking a referral fee or working off a contingency fee. And in our current exposure draft, we always have the option of disclosing whether or not you're independent. So even if in our current exposure draft, you're not precluded from saying, hey, I'm not independent. You're not required to, but you also would not be precluded from disclosing the fact that I am not independent with regards to XYZ company. If both B and C, which is the reporting requirements, above are met, which means you have this direct material or indirect material financial interest, and or you're receiving a contingency fee, referral fee, or so forth like that, you can disclose that as, you don't have to say, hey, I have a material direct financial interest. You can say, I'm not independent with regards to this company. But just like the current SARS 19 says, if you list that I'm not independent and you list the reasons why you're not independent, you will be required to list all of them. And so then if we think about, okay, when will an accountant be required to report under the current exposure draft? Of course, the accountant would be required to report when we're engaged to report. Just like SARS 19 requires now a written understanding with management on the terms of the engagement and so forth like that, we would still have that requirement. We plan to still have that requirement in exposure draft in whatever format it comes out in. But when we're engaged to report, or when we decide to report, let's just say we have those clients who we know, wow, this thing, I just really feel like it's more in the protection of the client, myself, and the public interest. If I want to report, certainly you can report. So the accountant will always have the option to report when it comes to a compilation. Also, a client, I keep saying a client, an accountant will be required to report when there are departures from the framework. So let's just say you're doing GAAP financial statements and management has elected to omit substantially all disclosures in the statement of cash flows, then you are required to report. Now, currently there's an option in there that says, right now there are two options. You either report or you include a legend on each page of those financial statements. Okay? So, with some application material that's in there now, it says if you decide not to report, but they have a departure from the framework, you can disclose that in the legend. Now, if you decide to disclose all these things in the legend, you're going to have a legend that looks like a report, and if you think about having that on every page of the financial statements, it's going to clutter things up, okay? So if you have a framework departure, such as non-disclosure, that's required by the applicable reporting framework, then you can either put it in the titles, balance sheet, substantially all disclosures omitted. You can put it in the legend, no CPA has audited, reviewed, puts any assurance on these, / all disclosures omitted. So there are different ways. Again, accounts report will be required when there's not an appropriate legend on the financial statements. So if the client says, listen, these are my financial statements, I don't want them cluttered up with a legend in all of them, then the accountant would be required to report. Again, we think this protects the public interest because you have a report out there that states what we compiled, what standards we followed, and so forth. Again, we talked about it just a few minutes ago. You will be required to report when you have a direct or indirect financial interest, or you work for a commission or a contingency fee. And those are the areas in which you would be required to report under the current exposure draft. Now, even if we know, under current standards, say if we know these are going to a third party, we are required to report. What the new standard, this exposure draft says, is even though we know these are going to a third party, you will not be required to report. But remember, you must either report or include a legend on each page of those financial statements. Okay? So even if it's going to a third party, you don't necessarily have to report, but you are required to put this legend on each page. Again, you wouldn't be precluded from reporting, but you better make sure you have this legend. Okay, if appropriate disclosures made of the framework on each page of the financial statement, if you have a no disclosure financial statement, then another thing that the exposure draft says is the user, the reader, must know what basis of accounting. So you may even put balance sheet, dash, general accepted accounting principles, dash, income tax, whatever it is. And so even if it's going to a third party, you either report or you have this legend. Excuse me. And so the legend example would be no CPA provides any assurance on these financial statements. Is anybody confused by that? If you're a reader of this financial statement and you read at the bottom of each page of the financial statement, no CPA provides any assurance on these financial statements, or these financial statements have not been audited, reviewed, and no CPA provides any assurance on them, you going to be confused by that? I'm not saying folks still won't take a little bit of comfort in knowing that it's on our letterhead or knowing we had something to do with it, but we think that is rather clear when it comes to what we have done to these financial statements. Compilation is a non-assurance service. And so here are the reasons why the ARSC in its current exposure draft really supports this legend for third-party use, because compilation is basically a preparation service. Now we've gotten some input to say, well, it's not necessarily that. What if we don't prepare the financial statements and so forth? So we're taking those things into consideration. But a compilation, according to what Peak has clarified within their definition, what we have determined is that it is a non-attest service. And if it is a non-attest service, then we would not be required to determine independence. Compilation obviously gives no assurance. There's a lot of confusion out there between not only users, but by practitioners also, about whether it is an assurance service or not. And this helps now because there have been so many questions on whenever we talk about prepare and submit, when does submission happen? When you punch the button, who punches the button? Who prints? Who doesn't print? Do I just give them a journal entry? What is submission? So it modernizes the standard for cloud bookkeeping when we're just doing financial statement assistance and so forth, and it removes this question about submission. That takes that out of play, basically. It will eliminate your SARS 8 engagements, which is your management use only, where you don't issue a report, but you have an engagement letter or understanding that is about yay thick. It takes that out of play because that was your only non-reporting type thing before. Now you don't have to report in any case unless it's some of these, but the legend will do just fine. All departures from the applicable framework have to be disclosed, unlike SARS 8, where you can have in your engagement letter, it may or may not include all disclosures, it may or may not be in accordance with general accepted accounting principles and so forth. So CPAs and clients can both use judgment as to whether to use the legend or the report, unless a report is required in those instances we talked about. And we don't believe it'll change the peer review requirements. As long as there is something to peer review, such as a legend, such as a report, such as financial statements. Right now, when we're talking about SARS 8 engagements, we look at that understanding in peer review. We look at that legend to make sure they have it. We don't think it will change any of those standards either. So quickly, as I'll try to go through here, here is just a draft of what we think the compilation report would look like under the current exposure draft. You can see right now that the standard compilation report is a minimum of 3 paragraphs. If you have some other issues, some departures, it may turn into 4. If you want to put an emphasis on them, it may turn into 5. But here it is, and it's basically the same paragraph, the same opening sentence. And then we say we've performed our compilation in accordance with SARS promulgated by the ARSC. But here's the big change. Such standards require me or us to be objective in the performance, and that comes straight from ethics of the engagement, but do not require us to determine whether I or we are independent. And this is what troubles some folks, and this is some things we're taking into account as we go forward with where we want to go as an ARSC. And of course, the last sentence, we didn't audit, review, nor did we perform any procedures to verify the accuracy, completeness, and so forth. We do not provide any form of assurance on these financial statements. There are about 7 questions that the ARSC is looking at. For time's sake, we don't have time to go through all these, but I think in the breakout sessions, we will probably hit each one of these importantly. So I'll just touch on them real quickly, but we'll look for feedback as to whether you think this attest, non-attest, repositioning of the compilation is appropriate. We'll also talk about feedback whether you're supportive of the requirement of the legend on each page when you're not reporting. And then we'll talk about, we'll look for feedback whether you're responsive or support the accountant not to report on compilations that omit substantially all disclosures. Again, there would be certain requirements around, well, you need to have something in the legend or you need to have something in the title that discloses there are no disclosures. Proposed reporting requirements, we went through those. We'll also look for feedback on the applicability of the compilation. We didn't have time to go through that in here because I'm really out of time anyway. But we'll go through those in the breakout. There are 3 points that say, hey, if you fall up under these SARs will apply to you. If you're engaged or decide to report and so forth, we'll look at those. Then we'll look at the requirement of the engagement letter. We didn't talk about this, but in the current standard, SARS 19, there's no requirement that the engagement letter be signed. How good is that? Pretty cool, huh? Well, we want to get that in there. If you read the exposure draft on the review standards, you'll know that that is a part of that. We will make that a part of the compilation also, because not only do I perform these, I do peer reviews also. And firms will say, oh, well, I don't have the engagement letter signed. So I'm like, you don't have to. It's okay. Now, when they're pulling it straight out of a non-authoritative guidance, say, here's my engagement letter. I've got problems with that. But right now, what we would have in the exposure draft is we want to have this signed not only by the CPA, but also by management of the client. And then we'll look at feedback on the effective date of it, which would be for periods, including interim periods. Okay, we're talking about fiscal years and interim periods beginning on or after December 15th, 2014. And unlike many of our exposure drafts before, we would allow early implementation. In our breakout session, we'll go into why we would allow early implementation. It all has to do with timing of these things, because if you think about interim periods, which a lot of compilations are done, if you think about bookkeeping clients and so forth, they're done on interim periods where you may have an effective date that we really want to early implement so we have some consistency. So that's basically where the exposure draft is now, and I'm out of time, but the review exposure draft is out, the comment period is up. We will look forward to having a final draft out soon, hopefully after our August meeting, but we'll go through the rest of the comment letters in our August meeting and make any changes that we need to at that point in time. We've got a meeting coming up in August, and in November we have already added a day to both of those meetings because we have a lot going on. And we want to make sure that we get a good standard out there in a timely manner that gives, and I'll tell you, one of the big things with this standard is going to be education. Not only education to the third-party users, but to the accountants performing these things, because it will be different. And so we will look at making sure that firms have plenty of times to implement these new standards and that the users understand it also. Okay, I don't think we have time for questions, but again, if you will come to the breakout sessions, I'll be glad to take care of any questions you have at that time. Thank you.